Sheldon, it looks like we're gonna have to follow the yellow pattern now. It's not the blue pattern anymore, right?
Yeah, yellow pattern, but it's quite interesting, brother. Is there anything that's going on? Like, I see Bitcoin is retracing, and then I look at this chart and I'm like, what's going on? Is this an attack on Bitcoin?
We've got Bitcoin going down, but we've also got dominance going down at the same time, which means
breaking
that
trend, brother. Look at this.
Okay, so something is going on. We're going to investigate what is going on with Bitcoin in the show. Why did Bitcoin come down in the last hour or two? Will it continue? That's what we're going to be talking about the show. Also, I'm going to talk to you about why the 11th of April. The 11th of April is such an important day. The 11th of April. If you're buying Bitcoin, you want to be buying Bitcoin before the 11th of April. Today, I'll tell you why the 11th of April is such an important date. So today, we're going to start the show on a slightly different note. We're not going to play the song. We're not going to play that song. We're going to play you a video. We're going to play you a very, very, very special video. We're going to play you this video. This is how we're going to start the show today. Did you just fart? Live.
Munger's videos are pretty well known. Several years ago, I think he called it rat poison, maybe rat poison squared. The 98-year-old is still not a buyer of Bitcoin. In fact, he remains skeptical of crypto investing overall.
Well, I certainly didn't invest in crypto. I'm proud of the fact I've avoided it. It's like, some venereal disease or something. I just regard it as beneath contempt. Some people think it's modernity, and they welcome a currency that's so useful in extortions and kidnappings and so on, tax evasion. And of course, the envy, everybody has to create his own new currency. And I think that's crazy too. So I'm not having any, I wish it had been banned immediately. And I admire the Chinese for banning it. I think they were right and we've been wrong to allow it.
I mean, Charlie Munger is salty. Wouldn't you be salty too, though? If you were part of a listed big conglomerate, right? If you were part of a listed big conglomerate, and your listed big conglomerate performed like this over the past 5 years, your big Berkshire Hathaway conglomerate performed 87% returns. And Ethereum did 23,847 and Bitcoin did 4,167. Wouldn't you be salty? That's the big question. Wouldn't you be salty? And he does sound super salty. He sounds super, super, super salty. I mean, those are big words to avoid investing in Bitcoin, like avoiding a venereal disease. That's bad. Hassel, have you ever had a venereal disease?
Fortunately for me, no, I haven't.
No, you haven't. Fred, have you had a venereal disease?
Brother, you have crabs.
Crabs. Okay, no, we'll talk about that later. Alrighty, so Charlie Munger is salty because he never got into Bitcoin. I think those were very, very, very harsh words. But I mean, we must put things into perspective. Charlie Munger is 98 years old, and he has missed much of the tech bubble. I mean, I don't know if you want to be taking financial advice from a 98-year-old who pretty much missed the entire tech bubble. And as much respect as I have for all the big wealth that Charlie Munger and Warren Buffett have managed to accrue, and no one can take that away from them. If you look at the numbers, and you look at the numbers on a 5-year period, so it's not, this is a 5-year period, you look at the numbers on a 5-year period, I think I would rather be backing Bitcoin and Ethereum than Charlie Munger and Warren Buffett. And that's not the only one he's missed. He missed Amazon, he missed Apple, he even missed Tesla. So Elon Musk actually just tweeted. Elon Musk just tweeted earlier today. He said, I was at lunch with Charlie Munger in 2009, where he told the whole table, he told the table all the ways Tesla would fail. Made me quite sad, but I told him I agreed with him on all those reasons, and that we would probably die, but it was worth trying anyway. So, I mean, he hasn't missed anything. And I think giving attention to a 98-year-old who's pretty much reached his sell-by date is a waste of crypto's time. So I'm going to spend much more time on that. All right, on that note, welcome to the new subscribers to our channel. Welcome to the new members of the family. Join the family, subscribe to the channel, like this content. We're trying to bring you the most alpha every single day. The most alpha per minute. That's the mission here. The mission here is to bring you the most free alpha per minute that you can get in the crypto markets, good times and bad. Today, I'm going to talk to you about Russia and why Russia possibly, or why these tensions in Russia and Ukraine would possibly be escalating, if they are escalating. Because Gareth Soloway says that we're nearing the options expiration on Friday. Surprise, surprise, Bitcoin's going down. Options expiration Friday, tomorrow equals Friday. And the fear of Russian invasions are growing. Classic OPEX action. The one thing I would mention is that the Olympics came to a close. The risk, as the Olympics come to a close, the risk does rise. I always argue that Russia would never ever piss off China by attacking or doing anything during the Olympics. I agree. You wouldn't want to piss off your best ally by attacking their big day, the Olympics. We're also going to follow up on our discussion from yesterday, where you guys wanted a Degen portfolio. If we do get to 3,000 likes, we do a Degen portfolio. If we don't get to 3,000 likes, not do Degen portfolio. Oh, deal. Good deal. Just before, they are talking about, we are going to talk about the Russian tensions. Before we get there, I just want to clarify one thing before we actually start getting to the alpha of the show, because we're pretty early. Let's really clarify one thing. Fred.
Yes.
Did you fart in the beginning of the stream?
Let me tell you what happened. It was.
All right, let's get serious. Let's get into the show. Come on, there goes Fred. Fred's nowhere to be found on the stream. Disappeared. Fred's not off the stream. All right. Fred, it happens, bro. It happens. It does happen. We all eat bad shit sometimes. Yeah, it's the Banter burger. It's the Banter burger. All right, let's talk about the Russia-Ukraine tensions. And it does feel like the Russia-Ukraine tensions are flaring up, and that is after yesterday we heard that the Russia had retreated its troops after what they called a military exercise. Today we saw this image being circulated, which looks like it's an image of a school, maybe a play school, and it is the tweet is around Ukrainian Armed Forces release statement that on a kindergarten shelling in eastern Ukraine, claiming that the shelling was done by pro-Russian forces. So that does look like there may be some heightened tensions or renewed tensions in Russia and Ukraine. And I guess the big question here is why the US would be getting so involved in a Russia-Ukraine skirmish. Why is it that all of a sudden Ukraine is not really part of NATO yet? And Ukraine does want to be part of NATO, but Ukraine's not part of NATO yet. Why would Russia, or why would the United States have such a special interest in people saying sort out the collar? So what do you prefer? You prefer that? Or should I just sort it out like that? What do you guys prefer? Like that?
Yeah, that's better.
But I feel like an old man. I shouldn't wear collar shirts. So why would Russia? What is the incentive for the United States to get involved in a Ukrainian-Russian skirmish? What is it that why all of a sudden is this such a big agenda on the Ukrainian on the US agenda? And I found an article. Now, granted that this article is part of the Russia Today, so it is a narrative that is part of Russia Today's narrative. So it's not a completely unbiased article, but it is worth reading some of the articles because the points in the article are pretty valid. So what they talk about in this article, this is the article over here, and it's called "The Reason That the US Wants War in Ukraine is Ultimately All About the Dollar." And what this article goes on to talk about is about why the US wants, after Moscow announced that it's pulling back troops from the Russian border, from the Ukrainian border, why is it that Washington is consistently talking about this invasion? And it goes on to talk about the US dollar and the fact that big countries like China and Russia are starting to debase themselves around from the US dollar. So it says here, Russia and China haven't particularly drastically cut their use of the dollar. In 2015, around 90% of their bilateral transactions were concluded in dollars. But since the start of the US-China trade war, that's fallen to about 46% and is declining further. Even US allies and partners like Turkey and India have begun trading in their respective national currencies when it suits them. Countries are questioning why US financial institutions should serve as intermediaries for international banking. And the reason why the US why this article says that the US is so intent on tensions in Russia is because for as long as the US continues to get into more debt, and for as long as the US continues to print more money and to create more inflation, they need other countries to absorb the inflation. And the only way that they can get other countries to absorb their inflation is if they allow these dollars, or these countries use these dollars. But if Russia, which is one of the superpowers, and China, one of the other superpowers, and a whole world movement start moving away from using dollars, then the sponge to absorb this US dollar inflation becomes much smaller. And so the theory here is they're saying that Beijing is actively encouraging the use of its currency, the renminbi, in trade transactions, especially under its Belt and Road Initiative. With China recently recovering more strongly than in other big economies from COVID-19, foreign capital has been flooding into as Beijing opens its financial markets. So this is all about the US and the US having this ability to, or the US dollar losing its stronghold. So there was a report, and it says that the US government, as the issuer of the world's reserve currency, is only interested in one thing: the proliferation of the US dollar. The single fact is that this single fact is all one needs to grasp to truly understand the US foreign policy. What does this mean in practice? It means that the US government, in collusion with the Federal Reserve, has the ability to print US dollars at will and can export its inflation to the rest of the nations around the world. Any nation that wishes to engage in international trade, including purchase of commodities such as natural gas, oil, must maintain US dollar reserves to enable its purchases. The world, in effect, acts as a sponge to absorb US inflation, allowing the US government to amass obscene deficits that would enable massive military budgets and enrich a very small portion of the US population at the expense not only of the world's population, but also America's working class. As for any nation that wants to break free of the US dollar, we know too well that what the US has in store for them. This is where the Russia Federation comes in. If one really wants to understand why the US establishment hates Russia under Vladimir Putin, all they have to do is understand the dollar's role in the world. Russia is a direct threat to the proliferation of the US dollar. So that is another way of looking at why there may be a narrative from the United States and why the United States may have slightly more aggression in the area and why they're so interested in that. Now, again, this does come from Russia today, so take it from where it comes. But it is good to see the other side of the coin. It is good to see the other side of the coin. Anyway, that's not the reason why the markets are going down today. Charlie Munger is also not the reason why the markets are going down today. Canada and this bank run on Canada. Okay, there is no bank run in Canada. I know people are talking about it, but I just want to put it into perspective for you guys. Right now, the Google Trend Index is at 14, which means that like the Google Trend Index, the people that are looking at Bitcoin right now, it's very, very low. It's orange. It's quite near the bottom, and that is around this whole Canada bank run. And even though there is these bank outages at all 5 banks, and these talks that Trudeau has crushed consumer confidence in the banks in less than 48 hours, some ATMs are still allowing cash to be pulled out, but going empty. The bank has now locked up everyone's funds. There is currently no bank run in Canada. Although I do think that the Canadian government is really testing its people. I think it is really testing its people. And it feels like, certainly from media reports, that the government is going to war with a big faction of its people. It's going to war with a big faction of its people. The Canadian people have pretty much said they've had enough of these draconian COVID measures. They've had enough of this draconian type of government. But I don't think that there's going to be a bank run in Canada. I don't think that we're in this bank run type of era. Canada is more than solvent. The Canadian dollar is a pretty strong currency. I don't believe that there's going to be a bank run in Canada. Alrighty, let's look at the market cycle. Let's look at the market cycle and look at how we are doing in the market cycle. So remember we said that this was the old cycle, and we're cycling, and we've got to become big cyclists. And you need to get onto the bike and start cycling the cycle up. And our thesis was that the new cycle started when we broke this trend line over here. So this was kind of like when we broke into the new cycle, and everything above here and all these little dips above here are pretty much just noise until we break back down through the trend line. If we continue above the trend line, our thesis is that we're above this cycle. And I found some more information about the cycle, and what to expect in the cycle, and why I'm more convinced than ever that we are in a new cycle. And I want to show this to you. And if we are in a new cycle, I want to show you which tokens are going to recover and how they're going to perform. And if we know which tokens are going to recover and how they're going to perform, then I want to talk to you about how you should be placing your bets. And yesterday I gave you guys a pretty safe, I called it the Degen-ish portfolio. That's the Degen-ish portfolio over there. Today, I want to go to the high risk people. I want to go to the full tilt Degen portfolios, but only if we get to 3,000 likes. Get to 3,000 likes, then we talk about the high risk portfolio. But first, you got to convince yourself that we're in the cycle, because if we're not in the cycle, if you're not convinced that this is a real cycle and you think that we may be going down again, then don't watch the show and don't invest in what I tell you to invest in. If you agree with us, then go into the thesis. But I want to present you with the facts first. So let's look at the facts. What I want to show you around the facts is that when you look at this cycle was a change in narrative. It was a change in news. And there was certain news that came out after the cycle had turned. So if you look at the cycle turned somewhere over here, that was the 24th of January, and it broke the trend line somewhere around the 5th or 6th of February. So depending on where you look at 5th or 6th of February. What happened on the 5th or 6th of February? Well, we had news. And the news was that KPMG announced that it completed or it had bought Bitcoin and Ethereum and put Bitcoin and Ethereum on its balance sheet. That happened on the 7th of February. And the cycle broke, the charts broke here on the 5th or 6th of February, depending on how you look at it. So depending on exactly how you put your trend line, 5th or 6th of Feb. So maybe this was the big indicator that we were in a new cycle. Then you look at the next day and you see that on the 9th of Feb, BlackRock also made an announcement to offer crypto trading. BlackRock, one of the biggest asset managers in the world, $11 trillion under management, they come out on the 9th of Feb perfectly with this trend line. Perfectly with this trend line. Here we go. That's the 9th of Feb. That's the 9th of Feb over there. Perfectly with this trend line. BlackRock came out of this. Now, I found a tweet earlier that talks about how that may have been the most significant part of the new cycle. And the reason why this is the most significant part of the cycle, it says, for the better part of the year, has been focused on equities. Equities have been in the driver's seats for all the building in the world, and it's not going to do much. It's all about the potential war. But what they say on the corporate side, KPMG announced last week that it had put some Bitcoin and Ethereum on the balance sheet. The amount was not released, though the size of its position is less important than the fact that it's happened. And the reason why it's less important than the fact that it's happened is because of this. Because even though there have been hedge funds that have allocated money to crypto, and then after hedge funds, we had corporates that allocated money to crypto. You had MicroStrategy, you've had the Teslas, you've had Square. When you look at the risk profile of MicroStrategy and Square and Tesla, they are all high-risk profile companies run by high-risk profile people. Elon Musk, high-risk profile person. Michael Saylor, proper Degen. He's a Bitcoin Degen. Jack is a Bitcoin Degen. But those are all extremely risk-tolerant companies. Extremely risk-tolerant companies. Funds are also extremely risk-tolerant because they're looking for returns. But when we had KPMG, that is a change in the cycle because KPMG by nature is conservative. KPMG is by nature a conservative company. So because they're known to be so conservative, and the same thing with BlackRock. BlackRock is by nature a much more conservative company. And so what we're seeing now is it's a change in the demographic of the market that is entering into Bitcoin. We've had the funds coming in. We had the cowboys coming in, the Michael Saylors, the Jacks, the Elon Musks coming in. But now we're seeing a different class of people coming in the cycle. And that is the more conservative class of people. This is pension funds, government pension funds and asset managers that are coming in. And this is KPMG auditors. So it's almost like, you know, you get the early adopters and then you get like a different class of people, then you get the laggards and whatever else. Well, now we're getting this new class or this new risk profile of person now coming into crypto. And that is, for me, an indication, and I don't think it's a coincidence, that these two announcements were made within a day of Bitcoin actually breaking the trend line into what we think was a new cycle, So that is one of the indications that I have that Bitcoin is firmly in the new cycle. And in this cycle, if you analyze the data of this cycle, the data for the cycle is super, super interesting. Let's look at the data for the cycle. If you look at the data for the cycle, I found this unbelievable. It's called the hot ball of money monitor. And what it does is it looks at the average 7-day sector return. So the average 7-day sector return. What you can see is that our narratives that we spoke about are playing out amazingly in the recovery. So if you look at the average 7-day sector return, the sector that recovered the quickest was gaming. The sector that recovered the second quickest was smart contract platforms, and the one that recovered the third is DEXs. So you can see here, you can look at this money monitor and you can see where the money is flowing and where the sentiment is. As soon as we get a recovery, what recovers first? Gaming recovers first. Gaming recovers almost like an elastic. It like recovers like an elastic band, and then you get smart contract platforms, which recovered, and then DEXs, which is exactly what I said. I said gaming, smart contracts, and DeFi. And for DeFi, I said buy things like Trader Joe, Astroport, etc. Then, if you look at the 1 month sector return, the 1 month average sector return, you can see that the best 1 month sector return in a bad month is gaming, smart contract platforms, and then file storage, which we spoke about, and then DeFi, DEXs, etc. If you look at the 3 month sector return, the best performing sector in this bear market, layer 1 smart contracts and gaming. If you look at the 6 month returns, the best returns in the last 6 months have been through layer 1 smart contracts, and then gaming, DeFi 2.0, and DEXs. So that's where the money is flowing to. That's where the money is flowing to in the cycle. Meme coins are not even a discussion anymore, but that's where the money is flowing to in the cycle. So you got to understand the market cycles, and you got to understand where these market cycles are going. Alrighty, let's see what else there is today. If you want to be allocating money, you need to understand this. I did see this, and we'll probably talk about this on Hustle Show a bit later, but gaming is $175 billion a year revenue industry. $175 billion a year. And you can
the
see
market cap is also about the same as Dogecoin. The market caps, undiluted, are about the same as Dogecoin.
So you can see where the money's broken up between mobile, PC, console. So you can see kind of where the money's broken up. There's also a crypto stack, which I think we should talk about on your show as we build the portfolio. We'll build a portfolio later on Hustle Show. We will both be giving you guys a portfolio. We'll look at the stack, the layer 1, the side chains, the applications, the NFTs, the aggregators. We'll look at all of this, and we will use this to provide to give you guys a stack and a portfolio for DeFi Degen. So it's not only a gaming portfolio, but it's almost like saying, if you're a gaming Degen, like our man Hustle, then what would your portfolio look like? Or what does your portfolio look like? And I'll give you a hint. There's no Bitcoin in Hustle's portfolio. There's no Solana in Hustle's portfolio.
So the reason for that, though, is Solana. I bought in early in Solana. I made a lot of money on that, and I just took profits, took it off the table. Sometimes you got to do what you got to do.
You got to do what you got to do. But what we do know is that gaming in this cycle is what's driving the cycle. It's either layer 1 smart contracts, and if it's not layer 1 smart contracts, then it's gaming. So you got to be in gaming the cycle. I don't want to spend too much time talking about gaming here on this show, because I am joining Hustle later, and we're going to talk about gaming, and we're going to show you what a gamer's portfolio is going to look like. Yeah.
Absolutely, I'm looking forward to it.
Alrighty. All right, let's talk more about this cycle. So more confirmation that we are in the right cycle. even though I do see a small little lower high. So a small little lower high over here. I don't think it's the end of the cycle. I think it's just a little retest, and it's going to continue to go up. There is something very important that you need to know about this cycle. And I got this information about the cycle. There's a whole lot of nuggets of information about this specific cycle and how this cycle is playing out. And I got this information from the Pantera newsletter. So I got the Pantera newsletter here. And in the Pantera newsletter, there is a whole lot of alpha here, which is super important. And I want to walk you guys through it because it really does talk to our thesis around this cycle. And the thesis around this cycle starts off over here, where they talk about the fact that inflation is at 7.5% and the Fed funds are at 0. So you're talking for the first time ever, this has never happened before, where you've got inflation at 7.5% and you've got the Fed funds at 0. And everyone knows that inflation is not actually 7.5%. We know that the inflation is actually way higher than 7.5%. It's 8.6%. So if you take the real rate of return and you say, okay, what is the rate of return less inflation? So if you take the real rate of return on money today, the real rate of return on money today is 5.52%. Okay, so that's the first part of this. The real rate of return today is about 5.52%, which is about on a 50-year low. Okay, so the Fed is in big trouble because the interest rates are close to 0 and the inflation is at 8% or 7.5%. So the real rate of inflation is actually minus 5.5%. But here's where it gets interesting. The Fed has made an announcement that they're going to start tapering their balance sheet. And tapering their balance sheet effectively means that what they're going to start doing is they're going to stop buying bonds. The Fed grew their balance sheet by buying bonds. They bought these bonds and they put money into circulation. That's how they saved the economy. But now the Fed is going to stop buying bonds. They've made an announcement that they're going to start buying bonds. When the Fed was buying bonds, this is what they did to the bond market. So they overvalued the bond market because they bought bonds and bonds became extremely overvalued. They effectively propped up the prices of bonds artificially. But we're now getting to a point where the Fed is going to stop buying bonds. And if the Fed is going to stop buying bonds, the biggest buyer in the market that's been propping up the market artificially is going to stop buying bonds. Then you don't want to be in bonds. You want to get out of bonds as quickly as possible because the Fed is going to stop buying. Not only is the Fed going to stop buying, but the Fed is going to start selling. So the biggest buyer in the market that's been manipulated, it's almost like in crypto, if you would have got a letter or an announcement from a pump and dump scheme where they said, look, we have been buying this token artificially for the last 2 years or 18 months since COVID, and we're now going to stop buying the token and we're going to dump all our tokens on the market. It's almost like you got an announcement from the pump and dump group of exactly the same thing. They basically said, look, we've been buying these bonds artificially. We've been propping up the price of bonds artificially. And now what we're going to do is we are going to become a seller of these bonds because we're going to reduce our balance sheet over the course of the year. And so what they said here, which was very smart, they said, if you own any bonds and you have yet to sell them, you might want to do so quickly before the Fed starts dumping before the Fed starts dumping on you. And you can see that that's already started to happen. The bond yield has gone from about 1.3% to 1.4%, and it's now at about 2%. That means that when people sell bonds, the yield on bonds goes up. And you can see that the bond yield has started to go up in anticipation of the Fed stopping buying bonds and now selling bonds. Okay, so where's all this money from bonds going to go to? If people are going to sell their bonds, where are they going to stop their money? And this is where Dan Moorhead and Joey Krug, who are probably some of the smartest investors in crypto, actually were very smart. He says, this is one of those times in trading where a trader totally missed a massive trade. The bursting of the Fed, of the bond bubble, the Fed's massive pivot, but I didn't forecast what obvious side effects it would have on crypto, and the crypto market's going to get killed. So he said, look, I forecast that the Fed was going to do a U-turn. I forecast that they were going to increase interest rates, but I didn't think it would smash crypto prices. Didn't fathom that would happen. And he says, my first thought about the markets, which obviously has had a massive move since we last spoke, it's one of those instances where in trading, you have a situation where a manager correctly predicts some huge disruption or change in the markets like we did in November and December. that the bubble in US bonds would pop and the Fed would have to raise rates a lot more than the market anticipated. But sometimes you have a concurrent move in something else that everyone at the time says is driven by the first move that was predicted. And in this case, we did not predict such a savage downturn in crypto. That puts the trader in a position of wondering whether they were wrong and that those things are connected, or that the market is wrong and over time it will shake things out. And what he's saying is that the market is actually wrong and that crypto shouldn't have been hit so hard. Crypto shouldn't have been hit so hard. And his thesis is that crypto will now recover because it shouldn't have been hit so hard by this. But why? Why does he think it's going to recover? They say that they think that we've seen the bottom. Pantera says that they think that we've seen the bottom, and that they say that crypto markets and stock markets, if you look at crypto specifically, when the traditional macro markets go down, crypto tends to be correlated with them for a period of roughly 70 days. So a bit over 2 months, and then it begins to break its correlation. And so we think that over the next number of weeks, crypto is basically going to decouple from the traditional market. So when markets go down, crypto will follow it for about 70 days. After 70 days, it will break the correlation. There are a couple of reasons for this. Why would this happen? A couple of reasons. One is because the difference between a 0 interest rate and a 1.25% interest rate doesn't make a huge difference for an asset class that is so small. That is so small. That's the first thing. They also say that crypto is the only asset class which is not directly correlated to interest rates. What do they mean? They mean very simply. If you look at bonds are 100% correlated and dependent on interest rates because bonds are future cash flows and you discount future cash flows using the interest rate. Stocks are the same because stocks are priced on their earnings and people price their earnings based on interest rates. And so the higher the interest rates, the lower the value of a stock. What he says here is, he says, let me try to find out. He says, I totally agree with Joe that the correlation between the S&P and crypto is short-lived. In the past 6 months, the S&P and Bitcoin were trading. In the past 6 months, 6 downdrafts, the S&P, since Bitcoin was trading in 2010, correlation spiked for 71 days. I think this will happen again here, and then they'll decouple. Once people have a little bit more time and think this through, they're going to realize that when you look at all the different asset classes, blockchain is the best relative asset class in a rising rate environment. Most asset classes do have a direct algebraic impact from rising rates. Bonds, obviously, when rates go up, price goes down. I think bonds are going to get killed. Most other things like equities have cash flows that need to be discounted, which implies lower prices if the yields are higher. That's also true for real estate and other type of assets. But blockchain is not a cash flow orientated thing. It's like gold. It can behave a very different way from interest rate orientated products. I think when all is said and done, investors will be given a choice. They have to invest in something, and if rates are going to be rising, blockchain is going to be the most relatively attractive asset. So that is what they're saying. They're also saying that if you look at the blockchain, the price of Bitcoin based on its trend, we haven't had a blow off top. So if you look at this cycle over here, the 2013 bull market cycle and the 2018 and 19 bull market cycle, they both had these blow off tops above the trend line. And that we haven't seen that blow off top yet in this cycle. And they also talk about a longer cycle. So they're almost saying we're still going to see one more long blow off top before we go under the line. It also says that they also talk about the fact that the price doesn't usually remain under the line for long periods of time. It says the year-on-year return never went literally off the chart like this in the past peaks. It's down 11% year-on-year during a period where the Fed printed $5 trillion. That makes Bitcoin seem even more cheap. So huge stuff. But they do say something else. They do say something else which you've got to pay attention to. They say two other things that we have to pay attention to. The first thing we have to pay attention to is this. In a year like we had last year. So remember last year. Let's look at last year. Let's quickly call up last year. Last year, if you look at it, there we go. Last year, Bitcoin started the year 27,752 and ended the year at about 50,000. So there's about 100% return, more or less, in Bitcoin. And that means that there are a whole lot of Americans that need to pay taxes on their last year returns. And it's not only on the top to bottom, but every time that they swap from Bitcoin to Ethereum, every time they made a trade in an up market, in a bull market, they have to pay tax on that return. And when do they have to pay tax? They have to pay tax this year on the 18th of April. So on the 18th of April, the Americans have to pay tax on the capital gains that they made last year in what was a raging bull market. So very similar to 2013 and 2017 and 2018, Americans have to pay tax on their gains. And so what they looked at here was they said, what is the peak relative to tax day? And you can see that the peak came 162 days before tax day. But the problem is that now Americans have to sell. Americans who are holding Bitcoin and Ethereum now have a tax bill that needs to be covered and paid on the 18th of April. When will they need to pay the tax? When will they need to pay the tax? They need to pay the tax on the 18th of April, which means that before the 18th of April, they're going to need to sell tokens to cover their tax payments. So if you made money last year, but you're still 100% invested in crypto, come the 18th of April, you have to write a check. You don't have actual dollars anymore, which means the only thing you're going to need to do is sell some of your crypto if you're American and if you pay tax. And most big whales, unfortunately, do pay tax. So what we can expect that 7 to 10 days before the 18th of April, so in 2013, the trough or the lowest point came 6 days before tax day. In 2017 and 18, it came 12 days before tax day. And well, 2021 to 22, we don't yet know, but we can imagine that it's about 10 days before tax day, which means that if you're going to be wanting to buy Bitcoin, probably around the middle of April, or the beginning of April, would be a great time to pay tax. Now, people here are saying, if you pay tax, the reality is that everybody knows that in America, they are clamping down on crypto profits, and that we can expect some tax loss selling as the market tends towards April. So keep an eye out for that, because the 11th of April may be a big day. 1 week before tax day may actually be a big day. We're not saying that the market's going to collapse, but what we are saying is that there's inevitably going to be some selling, that people are going to need liquid money, liquid cash to pay their taxes. So make sure that you keep an eye on that. Make sure that you keep an eye on that. And then the last thing they say is something which we've been talking about for the last couple of days. And that is about when money flows into Bitcoin. So when does money actually flow into Bitcoin? And the answer is very simple. Money flows into Bitcoin usually here at the peak of the cycle, when the prices are greater than 875% relative to the price trend. In other words, when prices are so high above the trend, that is when people ape in. And when people don't ape into Bitcoin is when prices are less than 27% of the trend or 35% of the trend, which means that people are deploying capital when they are too comfortable. Remember, we spoke about this yesterday in context of when it's right to deploy capital. And I said, it feels right to deploy capital now. Why does it feel right to deploy capital now? Because right now, it's comfortably uncomfortable. You feel comfortably uncomfortable to deploy capital, right? What you can see from this is that people deploy money when we are on the trend, when we are very much above the trend, but they don't deploy money when we're below the trend. They just don't do it because it feels uncomfortable, and that's why they don't do it. And so we should be deploying when we feel comfortably uncomfortable. That's what I think. All righty, we have 1 more minute, so we're not going to do a portfolio today. Should we do a portfolio today? We'll do a portfolio on Hustle Show later on. On Hustle Show later on, we'll do a Degen portfolio, a totally Degen portfolio. We shouldn't spend 5 minutes on the portfolio. No. It's going to be a long shot. It's going to be too much of a long shot. Okay, we'll do a portfolio tomorrow. We'll do a portfolio tomorrow before the call-in shot. How's that?
If we get enough likes.
Did we get 3,000 likes?
2,000.
Oh, okay. So we don't have to do portfolio.
We give them 1 minute to hit 3,000.
But we don't have any. I mean, we said 3,000, Fred. We said 3,000 if we want a portfolio, a Degen, totally Degen portfolio.
I think that if we can they've got 60 seconds to get us to 3,000 likes. If we can do that, then We'll give them the portfolio.
We'll see you guys again on Hustle Show. We'll see you guys again on Hustle Show when we talk about
Together a nice little gaming portfolio.
what a portfolio of a degen gamer looks like. And it's not only gaming tokens. It's actually, if you were a degen gamer like Hustle, what would your portfolio look like? That's what it's all about.
Yeah, good mix of big projects, middle-sized projects, and moonshots, low cap stuff you could probably 10x in a good market. So yeah, we'll take a look at it and we'll go over it. We'll piece together a nice portfolio.
Love it, love it, love it. We're looking at the Bitcoin price, 42,000 coming down. We're looking at the markets. The NASDAQ is down 1.5%. The US Dow Jones down 1.3%. So it looks like we're suffering the pain of the big markets once again. And I think that's probably because of Russia-Ukraine tensions. I can only imagine that's the reason. Alrighty, we'll see you guys again in a few hours, 3 hours, 3.5 hours.
Sounds good. I'll see you then, Ren. Good show.
I'm gonna go beat Fred at table tennis. I'll see you guys in 3 hours. Until then, trade well, my friends.